Yes, when you're in Turkey, you want dollars, gold, Bitcoin, or whatever else. When you're in the US, you have dollars, so stable coins aren't as important. But these technologies give people more choices, no matter what country they're in. They can get things or money from outside their borders that they can't get from inside their own country. And so that's pretty much the best defense we have against a full replay of past times of fiscal dominance or the effectiveness of capital controls. And I think it's important to defend. Speculators are wondering if we are about to see GameStop 2.0 because Keith Gill returned all of a sudden. Gill is generally thought to have started the 2021 GameStop short squeeze. We have hope, but at least one expert is still not sure. During the COVID-19 pandemic, Gill was at the center of the GameStop scandal. Ready traders turned the tables on hedge funds that had been making money off of failed physical game stores, sending the price of GameStop stock skyrocketing over 1,000% in less than a month. After regular investors turned their attention away from the event, the prices of meme coins like Dogecoin and Shiba Inu went through the roof. Gill stopped posting on social media on June 19, 2021, but on May 13, 2022, after almost 3 years, he came back with the usual vague meme of a gamer sitting up in their chair. His return has caused people to think again about the possibility of another big market event. This week, the Producer Price Index (PPI) numbers came out before the Consumer Price Index (CPI) numbers for April. TED Talk Macro, a financial commentator, pointed out this as an odd situation. Traders have a rare chance to make a lot of money because PPI data often causes big market changes when it comes out before CPI numbers. TED Talk Macro said that PPI and CPI data are strongly linked, with PPI data historically leading the way. This means that the market might react more strongly than normal to any unexpected data. According to data from CME Group's Fed Watch tool, the market needs big shocks to change its mind, and the Federal Reserve needs to cut interest rates before September. There is a 3.5% chance that the Federal Open Market Committee (FOMC) will cut rates by 25 basis points at their meeting in June, and a 24.6% chance that they will do so at their meeting in July. This shows how important upcoming economic data is for setting market expectations and guiding the Federal Reserve's choices about monetary policy. So, I believe that Bitcoin and other safe coins are very useful in this fight, right? That is, even in poor countries, someone like a Nigerian graphic designer could show me a QR code on a video call or send me a payment string in an email or direct message DM and ask me to pay her in any currency she wants, right? Doesn't it go around her neighborhood bank system? That's a really strong tool. There is one with infinite value density through ports of entry, and there is another with infinite value density peer-to-peer instead of through a public entrance. The best way to stop this is to hold on to those assets and be able to move them easily. This is also why you need to be aware of jurisdictional risks. I believe that, which is one reason why I think Bitcoin will be around for a long time, the setting where money rules. I also keep an eye on safe coins, especially when world events like that happen, because everyone wants to get to the top of the stack. My main hope is for a world with more than two sides. In other words, you asked before, what does this look like in other countries? How well they are able to get out of the trouble is partly what matters. For example, China can avoid some of the bad effects of us fiscal dominance by buying oil in its own currency. This is because they don't have to buy oil in dollars while the US is using its fiscal dominance plan. Because of this, I think that over time, there will be more trade deals between big countries and other economic blocs. But I don't think any of those currencies will get bigger than the US dollar, for example. They're either the only economy the size of the US's or they've closed off capital, kind of on their border. And in general, they're not the most reliable worldwide partner. It's not that one big currency takes over, but there is a bit more variety in how much each currency is worth or what kind of assets central banks hold as reserves. They may buy less treasury bonds and more gold because that's what they're used to seeing in the market. It's pretty big. Over time, we'll see what happens to the Bitcoin market size in 5 or 10 years or whatever else is going on here. While countries are trying to move away from the dollar from the top down, people still want dollars from the bottom up. This makes stable coins an interesting variable. That's where their fiat income goes. That's why safe coins are a way to get people dollars even though their government is trying to get rid of the dollar. In the face of top-down de-dollarization, stable coins can actually make it easier for the US to keep some level of global status. Now, people can decide if that's a good or bad thing, but it's just something that could make it easier. That's all the big changes that have happened, but the world is becoming more and more multipolar in terms of reserve assets and trade agreements between two countries. I think that if you could, you should short paper currency and hold on to things that are harder to get. This is especially true if you lock them in before rates went up. Also, to avoid tail risk, you should spread your investments across different types of assets. For example, you don't want all of your money to be in one asset that gets blamed for everything and gets taxed at 80%, right? It's not that the asset might be fine, it's that you might not be fine with that asset in your area. So either you pay attention to what's going on in that area, or you own something like a house. After that, you might have Bitcoin. You might have some cash, you might own energy stocks or different stocks with long-term rates locked in. Then they have the power to change prices, which could be in almost any industry. So you have this plan that can help you get through things. Individuals can choose to own T-bills or intermediate-term bonds instead of long-term bonds if they want to have lower volatility or if they are older. These are some of the different levers that people can use based on where they live. How much fluctuation can they handle? What level of risk are they willing to take in order to concentrate? This risk could come from politics as well, but basically you want to own assets that are harder to get and be very wary of having anything that's just paper-based.